If everybody is asking, is it a bubble? Probably isn't a bubble yet.
The AI bubble is a constant debate. Whether the market flops or flies, there are some companies that are set to soar no matter what.
Focus on the best moats that are out there. Even those big companies can still get a lot bigger if they have an economic moat that can help them preserve their competitive advantage.
Rob Spivey with Altimetry Research shares 2 stocks with strong moats that can thrive in any market.
The third company is the opposite. This is a company that we think that everybody should avoid.
Plus, he'll share one popular AI company he says has no moat and is warning investors to stay away from. Let's dive in. Today, we're continuing our Vegas series with Rob Spivey from Altimetry Research. Rob, I'm excited about this topic today because we're asking the big question that everyone has, and that's, is there an AI bubble? We're continuing to see the market reach new all-time highs. So many AI companies still going crazy. Is this a bubble or not?
Well, I mean, the funny thing is, good rule of thumb is if everybody is asking, is it a bubble? Probably isn't a bubble yet. Right, and there's a whole bunch of data that tells you, if you look in terms of where investment cycles are, where credit cycles are too, which are such an important part of understanding where you are in market cycles, all that data says we are in a very healthy environment and we've got a lot more room for this investment to run. But the real reason why I want to talk about today is because it's irrelevant for what I think you should be doing for your portfolio, whether or not we are in an AI bubble or not.
Yeah, I think that's the important point is no matter what happens, whether it's a bubble or not a bubble, the research that you've been working on is finding companies that are going to be safe no matter what cycles out, right? Talk about that a little more.
Yeah, and the idea for this is, it's a study that we did, basically using 25 years of our uniform cleaned up data to be able to identify, okay, can you understand and diagnose what are the competitive advantages different companies have? Because if you can actually focus on the competitive advantages a company has, as opposed to, this company is involved in AI, this company is involved in consumer, but really, how do they make money? If you can zero in on that, what you can actually start to understand is different competitive advantages have different levels of strength in terms of how high they are, different levels of the ability for companies in them to reinvest, and most importantly, different ones last different durations. And so if all you do, instead of keeping up at night in terms of, is the AI boom real or is it a bust in a bubble or anything like that? It's instead you just focus on the best moats that are out there, moats that actually last for a long time and have a lot of growth and can compound. You can set yourself up with a portfolio that'll go through an AI boom, an AI bust, or any other boom or bust that we'll have over the next 50 years.
Yeah, I think that's my favorite thing about Altimetry is that you guys look at all of these accounting principles, the fundamentals deeply. We're going to talk about this later on, but I wanted to put this QR code up right now just to look more at Altimetry's research and one really recent report that Rob and his team did talking about Tesla. Again, we'll tease that a little bit more later on, but I wanted to give you that QR code and the link if you want to look at that right now and just get a feel for the kind of deep dive fundamentals that Rob and his team at Altimetry do. So Rob, let's get into the different moats that you're talking about and the 3 stocks that you have for us today that show they have these really good moats.
Yeah, absolutely. So, the first stock we'll talk about is United Rentals, right? Which is, right, for those of you who don't know what United Rentals is, what United Rentals does is it rents equipment, right? And so you'd think this is incredibly boring, sleepy business. But what United Rentals does is it's what's called a scale distributor. And these are really, really interesting businesses because as the moat for these businesses sticks around, ROI, return on assets, how we look at companies, it rises over time. And so what you're just seeing happen with United Rentals is each time that they open a new location, because they have the broadest relationships to bring in new equipment, because of their broadest relationships with customers, as they open new opportunities, new locations, they do a better job of monetizing those locations. So return on assets keeps on rising. And so we've talked about the idea that over the last decade, they've seen their market share in this space go from 10% to 15%. And as that's happened, return on assets kept on rising. And it's going to keep on rising going forward, and the market's not pricing that in. And look, well, this company certainly is exposed to the AI boom because the fact that we're using more equipment to manufacture things, whether or not there's a boom or bust, this company for the last 20 years has had phenomenal ROA compounding. It's up 5,000%. We can think it can go up 5,000% again, So it's an incredible business.
That's what I was just going to ask is when you have a company like this that's solid already, that has a really great business model, that has good fundamentals, will you see that explosive growth or with an already solid company?
Well, and this is why, when you talk about United Rentals, and some of our favorite things to do with this kind of business is to find competitive moats, businesses with great competitive moats that are a little smaller, right? Because when you find the ones that are smaller, if you understand what the moat is and where that means return on assets can go, you can buy these businesses that can have 5,000% returns and have that phenomenal compounding. But even if you look, we talked about, I was just earlier talking about NVIDIA, right? NVIDIA changed its competitive moat from being a company focused on, okay, do I have the best chips or not, to everybody has to be on CUDA, which is their programming language to be able to interact with GPUs. And all of a sudden, what that meant was a $70 billion business, which is what NVIDIA was at that point, because of the fact that they got a stronger competitive advantage. That's how you get to a $4.5 trillion company that they are now. So even those big companies can still get a lot bigger if they have an economic moat that can help them preserve their competitive advantage.
Yeah, before we get on to the next stock you have for us, just talk about what a moat can be.
Yeah, so I mean, we've documented 13 of them, right? And so these are everything from like marketplace networks, like Visa, right? So these are companies where, right, you've got a two-sided, three-sided, or four-sided network, right? Where Visa, you've got the merchants over here, you've got the customers over here, and the banks over here. Well, as you get more banks, right, more merchants are going to want to work with them because you've got more people who can pay them. And that means more customers are going to want to come because they go, oh, I can spend money there, so I want to be on Visa's network. So it's this reinforcing factor. Then you've got companies like switching cost companies like Microsoft. Microsoft, the reason why Microsoft earns such a great return on assets so massively is because of the fact that it's almost impossible to move off the Microsoft platform once you're there. Microsoft Windows, Microsoft Office, think about trying to use Google Sheets in a professional setting. It's anarchy.
Yeah, no, a really good point that they're making it so you have to use this company, kind of get that competitive advantage. Okay, that's good to understand as we move forward with this next one. What's the second company you have for our viewers today?
So the second company is a company called Baker Hughes. And so Baker Hughes is an oil and gas equipment and service companies. It's exposed to another one of our competitive advantages called process know-how. And so what process know-how is the idea of you have a very narrow focus of something that you've built a really good core competency in doing. And for anybody else to do that also would take them years, if not decades, to rebuild, right? So what they do is they help oil majors or national oil companies punch holes in the ground, right? In terms of basically being able to say, hey, I want to frack, or I want to, optimize the reserve. And they come to Baker Hughes to do it. And so Baker Hughes over time has built a better core competency in doing this that no one else has built other than Halliburton, Schlumberger. So what you see happen as that gets stronger and stronger, it reinforces itself, right? Because nobody else is able to do what they do. The return on assets for that business keeps on rising. And right now, because the market always misunderstands process know-how businesses, the market is pricing in profitability decline, where we think, look, Baker Hughes is obviously going to keep on seeing this building competitive moat keep on build and return on assets will rise. And that means the stock's really cheap right now.
Okay, so that's interesting. There's still a lot of room to run for this company.
Exactly.
What kind of factors can help this company grow? They've got the moat in already, but are there other economic factors or different moves that can help this company do well? Or are you saying basically no matter what happens in the economy, this company's going to do well?
Yeah, and people might listen to this and go, like, well, hold on. Baker Hughes is exposed to the energy sector, so there'll be cyclical things that happen. And certainly that's true for Baker Hughes. And so Baker Hughes might be one that if you're worried about the energy sector, it might get choppy in the short term, but over the duration, if you're holding Baker Hughes for 10 years, for 15 years, and if you're letting it compound, which is what you want to do when you're investing this way, you're going to be fine through cycles. And also the whole entire idea of this is you want to invest a portfolio of companies that have this competitive advantage, and over time, all of them will rise. But again, if you're holding for a long duration, sure, for a year, maybe Baker Hughes could get hit as oil prices fall, but it's going to have that compounding competitive advantage over time, and that's what's so powerful.
Yeah, that's what this whole video is about, that competitive advantage, those moats that we're talking about.
Exactly.
A good second company. Let's get to the third company now.
The third company is the opposite. This is a company that we think that everybody should avoid, and it's because of the other really powerful thing that happens when you talk about competitive advantages. It's companies that change their competitive advantage, right? So when you talk about NVIDIA, which is not the company I'm saying to short, but when you talk about NVIDIA, what NVIDIA did from the mid-2000s until today, that caused it to go from a $2 billion stock to a $4.5 trillion stock, was it went from being a business that was competing on, we have the best chips, which is just involved in terms of, well, guess what? AMD, who also makes GPUs, could innovate and have a better chip than you next year. Well, that means that competitive vote doesn't last. But when they did this whole entire idea of building a platform, that's really durable. Well, Oracle is going the exact opposite direction. Oracle is one of the best business models in the world. They make PeopleSoft software, ERPs an ERP is the software that a business runs on. When you change ERPs, that is a CEO tenure ending type decision. So you never see it happen. So for Oracle, when they get somebody locked onto PeopleSoft, they collect revenue year in, year out. It's locked in. They decided, you know what, that business isn't good enough for us. Instead, we're going to go build data centers for OpenAI. You want to talk about data centers? Data centers are what we call an operating scale business. It's basically just You build a bigger data center, you have lower costs, and that's the advantage you have. It's a lower return on asset business. It's a less durable competitive advantage business. And because of that, we have seen Oracle's return on assets steadily fade over the last few years, even though it's gotten to be a $700 billion company. And so we think Oracle is one that, at some point, I don't know when it's going to be, and Oracle could go higher because, we are, the market is cruising for AI things. But at some point, the roosters are going to have to come home. The chickens are going to have to come to roost. And would you not want to be owning Oracle stock?
This is such an interesting one because the stock has had such a great year. I mean, it had a 40% jump in almost one day this year already. Lots of analysts giving you upgrades saying that there's a strong future for Oracle. And you're saying the opposite about this.
And this is the cool thing is when you focus on competitive moats, you don't get lost in the narrative. Because so often what happens for things like that is like, they want a contract, they run a contract, they want a contract. It's exciting. As opposed to understanding, no, this is literally a structurally lower return on asset business, a structurally lower margin business they're going into. That's not good, which you can understand if you focus on it from a competitive advantage perspective. It's a secret weapon for you for investing.
Very interesting. So short term, do you think Oracle still has a chance to run up higher? I know you've kind of said that already.
I mean, certainly. I mean, if you ever put a gun to my head and said, where is this stock going to go in 3 months? I would go, I don't know, up, down, left, or right. But if you look in 2 years, 3 years, 4 years, where will Oracle be? I would not be an owner of Oracle for the next 2 to 3 years.
Interesting, a different long-term perspective. Let's talk back to what we started this video with, talking about that AI bubble. Short term, there is this chance for these AI companies. We're seeing so much demand, so many more contracts, like you mentioned. Why do you think that we might not be in an AI bubble right now?
Yeah, I mean, because look, bubbles happen when there's truly a mania going on. And at this point, when you look at where valuations are for a lot of the companies in the center of the AI boom, and that's what I would call it, a boom and not a bubble, because we are not in bubble territory yet. I mean, when you look at an Alphabet, you look at a Microsoft, you look at a Meta, you look at an Amazon, their PEs, their uniform, when we clean up the data with uniform accounting, we look at it, their PEs are not at crazy high levels, especially for the earnings growth that they're generating. And the other thing too is when you go back to the dot-com bust and what happened there, a lot of this was companies financing growth with a ton of debt because they didn't have cash flows. Well, the companies that are at the center of this, right, the true hyperscalers and the Meg 7, these companies are companies that are awash with cash. Last year, the big four, those four companies that I mentioned, I think they had over $350 billion of operating earnings, right? How we look at things in a uniform accounting basis. And they're only talking about basically reinvesting $300 to $350 billion in new growth. So that means they can finance all of it. And so when you look at all that, it says, look, if you want to talk about OpenAI and some of those other companies which are private anyways, right? Nobody can participate in them anyways. I'm sure some of those companies, valuations are getting crazy high, and those companies might end up being commodities. Because really, if you think about it, ChatGPT, it's gonna end up being a commodity because you've got that, you've got Gemini, you've got Grok, you've got Claude, you've got all the other ones in terms of that. But what you see the people at the center of this and the companies that you can really invest in that are actually powering the market higher too, they all have reasonable valuations. And so for that, we just think it's a no-brainer that we are not in the middle of an AI bubble yet. It's a boom still.
Yeah, still a boom and still different facets of AI that are getting a lot of growth and a lot of attention right now. I know you've recently done this special report. Let's dive into that more. I mentioned this earlier, but you're looking at Tesla. So one, why do you think that this company has a chance to grow even higher? And then how does it relate to the moat conversation we just had?
Yeah, absolutely. And so you look at Tesla, and right, our big focus with Tesla is the whole entire idea of what's happening with Optimus. What they are doing, everybody thinks that Tesla's next step is going to be self-driving cars or robo-taxis. But the reality is, Elon is all in on robotics, right? He is all in on the idea of building in the next big robotics company. And when you look at Tesla, there's a reason why the stock has done what it is because if he does that, he's going to unlock a huge opportunity for the company. And so what's really interesting is it moves Tesla from what it has been right now, which is really as an automaker. Automakers are operating scale companies, right? He's got no IP in terms of at this point, in terms of his cars versus anybody else's cars, maybe a little bit with self-driving, but everybody else is coming along with self-driving too. But when he goes to robots, there's a lot of IP that he can work into that too, intellectual property, and that is a competitive moat that's a higher return moat. And so he's actually helping himself move in that direction. And so what's interesting there is that helps explain where Tesla is now. And even beyond, it helps really point to the idea of as Elon is all in on this investment cycle, it means you've got somebody who has a force of will to make robotics happen that he's going to, which is why we identified the handful of companies that we identified in the special reports that we have in this Tesla special report that we think could soar because of it.
Yeah, that are going to go soar alongside Tesla, correct?
I'll just say that one of the special reports that we have in that actual promo is about whether or not we think Tesla is a buy or not. So I'll save that for that special report if people tune in.
Yeah, if you want to take a look at that full report now, again, you have a QR code you can scan right now, or click the link right in the description of this video to get, Rob's full research on Tesla, where it could be headed, and some of the other stock tickers that might be growing alongside the company too. There is a deadline on that. I think November 6th, there are some announcements coming up. So you want to click that and learn more about it. The sooner the better for sure. Rob, such great information today. A great conversation on moats. I love it.
Bridget, thank you so much. Always a pleasure getting to talk to you. So thank you so much.
Yes, I love it too. Well, let me know what you think in the comments. Have you thought about the idea of moats and looking at the fundamentals of a company? Is that something that you're watching even closer than the kind of short-term contracts that these companies might be getting? I'd love to hear your thoughts in the comments. Thanks again for watching, everyone. And as always, happy investing.